A factor holding Decibel back is their balance sheet, which may not be very strong but is stable. In January of 22, they secured a $54 million credit facility which allowed them to buy back their convertible debentures, which had a higher rate of interest and were potentially dilutive. That left them with $36.2 million in term debt at 4.75% interest, a $7.5 million line of credit, which they haven't tapped, and a $6 million overdraft, which they have, and is still at $6 million, while their term debt has been paid down to $33 million. The last significant improvement to their balance sheet came with their June 23 report, when they decreased their accounts payable by $4.2 million, though it still looks high. But what are accounts payable? Some are debt, which needs to be paid with profits for things such as equipment they may have bought on credit. But some of it is for inventory such as packaging, which will be expensed to cost of sales when they are used in normal business operations, meaning those bills won't come off the bottom line and affect earnings so much as they are expenses that will come up anyway. They've just already taken delivery of these necessary products, but have yet to pay for them. After about an hour of looking, I couldn't find where they mentioned it, but earlier this year Decibel did say that they had entered into an agreement with a supplier, the gist of which was that they'd take on more inventory at a better price, and that they were growing fast enough to justify doing so. While I don't know how many of their bills are debt and how many are expenses, the fact that they paid down these accounts 2 quarters ago and increased them last quarter suggests they are paying down debt and taking on inventory. And while the $5.2 million increase in their latest report may seem large, it is mostly offset by a $4.5 million increase in accounts receivable, and is likely inventory as they have invested heavily in their business already and, according to their CFO in an email to me, capital expenditures is quite limited going forward. How quickly might they improve it from here? As discussed in my previous video, their latest quarter was dragged down by the settling of a lawsuit that cost them over $2.5 million. And their exports were delayed by a third-party lab, a problem which is now resolved and will be made up for by those deliveries being made in the current quarter. So without those two factors, Decibel may have paid down their overdraft a bit already. I explained that they could easily make $20 million or more over the next 4 quarters, given that recent quarters have seen $5 million in profits and strong revenue growth, so that estimate may be conservative, which isn't financial advice, none of this is. But if they do make $20 million over the next 4 quarters, they will pay back about $2.5 million in principal on their term loans, plus interest, say about $4 million. And they can pay off their $6 million overdraft, leaving them with $10 million, which they can use to pay down their term loan, I suppose, build cash, or even buy back a few shares. Whatever they do with the money, it seems likely that their balance sheet will be significantly stronger fairly soon.